So we got the latest news coming out of Sacramento, California, and it says that State Farm homeowners insurance rates to skyrocket. And this was after I came across another article, and I wasn't able to actually access it because I don't have a membership to the Sacramento Bee, and I never will, because I'm not going to sit here and subscribe to all these different news channels and news websites just to get the same news that you can get everywhere else, which I'm bringing to you guys as well. So consider this a value play. But the story is pretty simple, pretty easy. A major insurance company is set to increase its average homeowner policy price in California next year after receiving state approval. I think next year was 2023 and they meant 2024. So here it is, folks. And I think this is like really great timing considering the conversation that we had last night about picking and choosing the future of our own personal, my family's personal living situations and circumstances. But as we can see here on Fox 2 KTVU, State Farm homeowner insurance rates to skyrocket. So this insurance company that was mentioned in this teaser headline of a major insurance company is set to increase its average homeowner policy price in California. Well, come to find out, it's State Farm. And honestly, I wouldn't be surprised if every other insurance company follows suit and we see California taking on the same role that Florida had in 2023 with the whole insurance crisis. And it's only going to get worse. Customers with home insurance policies through State Farm will soon pay higher premiums after California granted a rate hike. State Farm insures 1 in 5 homes, that's 20%, in the Golden State. Its policyholders will see an average increase of 20% beginning in March 15. So get ready, folks. The prices are going up. However, pro-consumer United policyholders said what homeowners pay is based on their community's risk. Some may experience a very tiny rate increase of 1 or 2 or 5%, while those probably in the higher risk areas could receive a 50% increase, possibly even more, said Joel Launcher of United Policyholders. Now, this is huge. This is important because it says on average the increase will be 20%, but the average is a collective number calculated from an entire range. So as they're saying that, some folks could experience a 50% increase on their insurance or more. Brace yourself, folks. Not to mention, it's all based on your community's risk. It has nothing to do with you. It has nothing to do with your property per se. It has nothing to do with your claims history. It has nothing to do with anything else. So if you live in an area that is prone to higher risk, if you live in an area where a lot of your neighbors were previously filing claims and getting their insurance to pay for it, well, you too are about to pay for it as well, even though you thought you were a good customer by never filing a claim. Multi-line insurance agent Carl Sussman said State Farm proved to the California Department of Insurance that it needed the increase. In California, I think we rank somewhere around 6th or 7th least expensive property insurance in the country, said Sussman, owner of the Sussman Insurance Agency. And the Department of Insurance issued this statement, and I quote, Commissioner Laura is focused on protecting consumers and using every tool at the department's disposal to make sure policyholders do not pay more than they are required, end quote. Well, that's a load of bull, folks, because they're going to make you pay more. Whether or not it's required, that's up to you to decide, but I can pretty much guarantee and assure that anybody right now facing a possible 20 to 50 or 20% to 50% or more increase in their homeowners insurance in California is probably not going to be too thrilled about that. Harvey Rosenfield of Consumer Watchdog said, on top of the 20% average increase homeowners will pay State Farm, renters will pay 11% more. And there is no requirement that any of these insurers sell a single additional policy to anybody, said Rosenfield. Drivers will also pay more, as State Farm drivers will pay 21% more. Geico drivers will almost 13% more, and Allstate drivers 30% more. And you know why? It's because they got a bunch of driverless cars riding around California that are immune to speeding tickets and any traffic violations. So folks in California are literally paying more for car insurance because there's people out there, or there's cars out there driving on the road without any actual people behind the wheel. Think about that. Drivers, let's see, it says drivers, it will all add up fast. all add up fast. So considering that, we're still looking, but we don't think at the moment we can go buy a house in California, is what one person said, Samira Sheik, who hopes to buy a home sometime. I'm gonna tell you guys right now, I feel pretty confident about my own personal financial situation. I don't feel confident that I could buy a house in California that I would want to live in. Like, California's real estate market is so ungodly expensive, it's unreal. The best hope is that most insurers come back and boost competition to lower prices, but odds are more than likely companies like State Farm and their current competition are going to keep competition limited because of just that. Not to mention, why would competition want to come into a market only to offer lower prices and make less on the insurance that they're providing, unless they have little to no intention of actually making good on the policies that they're writing in the event of a catastrophic loss. So this is a racket, folks, and this is going to continue. I have no faith in the homeowners insurance market at all, and I'm gonna bring you guys another video here soon, maybe not today, maybe tomorrow, maybe the next day, of the reinsurance market, which is essentially the companies that insure the insurers, and we got a big problem there. The writing is on the wall. This is literally a Ponzi scheme. This is a Ponzi scheme. They do not have the money. They're writing checks that they cannot cash. They do not have the funds. They are not liquid. They do not have the liquidity and the cash flow and the reserves and retained earnings on their balance sheets to actually make good on these policies in the event of a massive catastrophic loss. And if you live in California, you have to be of sound mind in really, I know that's not necessarily always true, but you have to realize that you're in a disaster area. You're in the line of fire, whether it is wildfire, whether it is earthquakes, whether it is tornadoes, as we saw last year, and hurricanes coming in, Hurricane Hillary, and now massive crashing waves coming in on the shores, destroying or putting people in harm's way and destroying property, this, that, and the other. California is a high-risk state, period. And these folks, these insurance companies, are not out there to do you a good service. They're out there to make money and turn a tremendous profit. And they are about to do that by jacking up the insurance rates and denying claims left and right. And they've got some folks out here in California who are approving that process to be pushed forward and pushed through. So keep that in mind. And if you are a homeowner in California, then I would urge you to be financially responsible and take this into consideration for how much more your homeowner's insurance policy premium is going to rise effective March 15 moving forward, and taking steps to prepare yourself for what you're going to do moving forward after that. Is it renegotiating? Is it shopping around for a better price? Is it relocating? Whatever that may be, you might want to take a look into that, because this is only going to get worse as time goes on. The prices are going to continue to get higher. This is the great wealth transfer that we were talking about. This is the great reset underway, happening right now. And I hope that you guys are paying attention. Please smash that like button, subscribe to the channel. If there's any news stories or topics or conversations you'd like me to cover, then feel free to reach out. My info is in the description down below. Until next time, you guys take care, be safe. I'll see you real soon. Bye.